Welcome to the Asset Events edition here in Singapore. Today we were talking about China and India and the future of emerging markets. Our moderator was Bayani Cruz, Executive Editor of The Asset. Bayani, you were moderating this panel. Share with us some of the takeaways when you listened to some of the investors.
Well, basically China, India, and the rest of the emerging markets, they're all positive, except that they expect some what they call pin points or pin pricks, as long as which are basically challenges and concerns that face these markets going forward. So although there's a lot of opportunities to be made in these markets, there's also some risks and challenges that investors have to look out for. And then, but overall, these opportunities probably will make up for the challenges and risks that are of investing in this market.
In short, they were describing pinpricks because in a sense they're saying that it doesn't drive investors away. The investors still want to participate in this market. And let's look at India, right? They raised the issue of India. What was your thinking around some of the conversation around India?
Well, India, there seems to be a lot of restrictions, and the government does seem to have taken some counterintuitive actions, which does not bode well for developing the market in general. China, on the other hand, has taken the opposite direction, so they're allowing more market access and there's better planning on the part of regulators and better investor education also. So although there are similarities in both markets, there are also kind of differences in the way they approach things.
Yeah, they were saying about India is 3 steps forward and 1 step back, right? And there's a lot of regulatory issues that are happening that sometimes investors lose track.
Exactly.
What about China? We've seen a lot of development in China, whether it's the Bond Connect, the Stock Connect, all of the opening up, CIBM, right? What was the takeaway from the panel?
For China, it seems to be going in the right direction. GDP growth will continue.
Yeah, it's slow.
It's slow, right? But it's still strong enough. The economy is still strong enough to sustain the rest of the emerging markets. The opinion is that there will be more coordination between the regulators, especially with the new officials that have been appointed to take over the PBOC and the other agencies. Overall, things seems to look quite positive for China.
It seems like PBOC as well is the lead agency now.
Exactly.
A lot more powerful in terms of some of the financial changes, regulation, reform that we're going to be seeing going forward.
Yes, that's right.
Finally, final thoughts on, I mean, of course, we're in the midst of this big discussion around trade, possibility of a trade war between China and the US. Did you feel that that was sort of a factor that will be affecting investing in emerging markets into the future?
Well, from the way they talk, it seems to be, well, they didn't brush it off. They view it as a concern, but they don't seem to be overly concerned with any impact that the trade war may have on investing in emerging markets. So, yeah, they're looking at it, but it's not something that they're overly concerned with at this one.
Excellent, Bayani. Thank you very much for moderating. You've been watching the Asset Events, China and India, and the future of emerging markets. Thank you for joining us here in Singapore.